Okay, so fellas, in today's video, I'm going to be taking this 50 USD account to over 400 USD trading Boom 900 index. So stay tuned to learn how you can spin your own account as well. Now, we're starting off the analysis on the daily chart, and on the daily, this is actually a relatively new instrument. Boom 900, it's new. So on the daily chart, we start off by noting down the BOS above that high and the change of character. So price broke structure above that high, then it broke structure below that low, giving us a change of character. It's like it wants to now continue dropping down, so it returned back into the range, breaking structure above that high. And then when I zoom on to the smaller time frame, like the 4-hour chart, we can see price raided that high, and as soon as it raided that high, it met an interest point onto our left. And if I stretch out, we can see it hit the mitigation block on the 4-hour time frame. So yeah, after it hit the mitigation block, it dropped down to break structure below that low, and as soon as it broke structure, continued to drop down to sort of like break another low, and this is like the lowest it could break before it reversed back into the range, and it did sort of some price action, you can see, but it has to keep on dropping downwards. So now let's cover this on the 4-hour chart. Now on the 4-hour chart, we can see it it traded that high, and after it traded the high, it hit the mitigation block on our left, and after that it had a nice clean reaction off of it, and you can see the price action it gave us. It couldn't continue to shoot up, but it started to drop downwards. So price broke structure below the low, and then it returned back high, trying to make a higher high, but then it failed and reacted off of the rejection block, and then continued to drop down, and it further confirmed the downward movement, breaking structure below that low. Now what we expect price to do right now is to return back into the range and respect an interest point to continue dropping downwards. So currently it's reading that high, it's giving us a run on stops above that high, filling in the fair value gap, as you can see right there. And then after it fills the fair value gap, it's going to react off of an interest point, and then we drop down with it. So yeah, let's look deeper on to let me first go over to the daily chart and show you the rejection block where I think price has to react off of. Now at that level, that's where we search for our interest point. So now let's look in deeper onto the smaller time frames, and this is like on the 1 hour, and we can see there's a 1 hour breakup block. So that's the first interest point, and then if I mark out this 1 hour order block, that's literally right at the same level. So prices to just react and then dip down into the sell side liquidity. So it had to respect the daily rejection block, hit the 1 hour mitigation block, and hit the 1 hour order block. That's when we can sell. So there's a lot of confluence right at that level, and it's an sort of a sensitive area for us to sell at, and with a 50 USD account. So yeah, I actually didn't get to show you guys the balance in the beginning of the video, but the 50 USD account, I could enter multiple positions. This Boom 900 actually surprised me how slow it is, and should I say maybe it's not really that powerful, but you guys will see later on why I'm saying that. Maybe it's just not powerful, but it's actually slow because I held this trade for a long time. So yeah, with 50 USD, I entered about how many positions? Is there like 10 positions? Probably somewhere there. So 10 0.2 lot sizes. We'll see what price did afterwards. Now, it had a clean reaction of our cell level. I liked it. You can see like it didn't waste any time. It tried shooting back up and breaking structure above there, but I just kept on dropping down. And again, you can see there's the history, and we're at 90 something USD in profit. And I decided, let me close right now and then enter again. And I actually have a reason why I closed and entered again, but I don't know, maybe I shouldn't share it right now. But if you can see like the spikes, it's in the spikes, like before it broke structure, it just spiked back up. There's a lot of, should I say, a message like before it breaks a low, price likes to spike up and then continue drop downwards. So I waited for the spike, and then that's when I closed, and then I entered again. Now we entered with a much more powerful position, and we have to see what happens afterwards. Okay, so now after a long time, mind you, I think if you can check the times, top left corner, the first trade we took around maybe like midnight, and this is like 15 hours after our first trade. So I had to hold this whole trade for a whole long time, and I could have kept on holding it again because there's sort of like a liquidity void right below there. I should have done that, but yeah, we're 300 USD in profits. We're 300 USD in profits, from like 50 USD to 400 USD. I don't know, sometimes like when I'm satisfied with the profits, I just decided to close, but maybe I should have moved with the stop losses, but I was actually satisfied, so I decided, I think it's time maybe I should close, and then we can split the profit, and then from there we continue with what remains. We have to cash in what we can, and 400 USD cash out seems to be actually okay. It was good enough. So yeah, I decided to close, and you can see right there that price kept on sort of like dropping down. Yeah, it kept on dipping down into that imbalance, but yeah, we had cashed out already, so I continue with the 50 USD again. So thank you guys for watching the video. Make sure to like, comment, and subscribe if you haven't. Or see you guys on the next video.